Welcome to the Beginner's Guide to Betterment Asset Classes, a comprehensive tutorial designed to help you understand the fundamentals of investing with Betterment. Betterment is a robo-advisor that offers a range of asset classes to help you diversify your portfolio and achieve your financial goals. First, let's start with the basics. An asset class is a group of investments that have similar characteristics and behave in a similar way in the market. Betterment offers a range of asset classes, including stocks, bonds, real estate, and commodities. Each asset class has its own unique benefits and risks, and understanding these is key to creating a diversified portfolio. Let's break down each asset class. Stocks, also known as equities, represent ownership in companies and offer the potential for long-term growth. Bonds, on the other hand, represent debt and offer regular income in the form of interest payments. Real estate investments, such as real estate investment trusts or REITs, offer exposure to the property market and can provide a steady income stream. Commodities, such as gold and oil, can provide a hedge against inflation and market volatility. Now, let's talk about how to allocate your investments across these asset classes. The key is to diversify your portfolio by spreading your investments across different asset classes. This can help reduce risk and increase potential returns over the long term. A general rule of thumb is to allocate your portfolio based on your risk tolerance and investment horizon. For example, if you are conservative and have a short-term investment horizon, you may want to allocate a larger portion of your portfolio to bonds. If you are more aggressive and have a longer-term investment horizon, you may want to allocate a larger portion of your portfolio to stocks. Practical examples can help illustrate this concept. For instance, a conservative investor with a short-term investment horizon may allocate 60% of their portfolio to bonds, 20% to stocks, and 20% to real estate. An aggressive investor with a longer-term investment horizon, on the other hand, may allocate 80% of their portfolio to stocks, 10% to bonds, and 10% to commodities. In conclusion, understanding the different asset classes offered by Betterment is key to creating a diversified portfolio that meets your financial goals. By allocating your investments across different asset classes, you can reduce risk and increase potential returns over the long term. Remember to consider your risk tolerance and investment horizon when allocating your portfolio. And don't be afraid to seek advice from a financial advisor if you need help. With this guide, you are now equipped with the knowledge to start investing with Betterment and achieving your financial goals.